Good morning, this is Tim McGowan for the Finance News Network. Stocks fell for a fourth straight day on Wednesday, the last day of August, putting the summer market comeback in doubt as investors weighed the Fed Reserve's inflation-fighting efforts. The Dow Jones Industrial Average slid nearly 0.9%, the S&P 500 lost 0.8%, and the Nasdaq fell about 0.6%. The major averages were all higher earlier in the day. What began as a strong month for the three major averages ended on a weaker note. The Dow finished August down 4%, while the S&P lost 4.2% and the Nasdaq lost 4.6%. The market gave up an early bounce attempts that were likely helped from slower jobs growth and select internet read-throughs from the Snap US update. Shares of Snap, the parent company of social media app Snapchat, surged more than 9% over the day, in addition to announcing that it is reducing its full-time employee headcount by about 20%. The company said it either substantially is reducing or entirely eliminating investments in some of its more speculative and obscure product lines and services. It's also been a wild month for Bed Bath & Beyond shares amid a return of the retail trader interest. The meme stock, a favourite of the Reddit crowd, jumped from a low of $4.89 at the start of August to an intra-month high of around $30 in the middle of the month, before paring back those gains. It came under pressure recently after influential investor Ryan Cohen sold his stake in the firm, only to bounce back on the possibility of fresh financing. Overnight, the energy sector was under notable pressure alongside weaker crude. Oil prices have continued to slide on investor worries about the ailing state of the global economy, the prospect of central bank interest rate hikes, and the increased restrictions to curb COVID-19 in China. On the energy front, China's coal stocks have been rising as investors are betting that the country's plan to revive economic growth will override concerns about pollution to drive demand for fossil fuels and reliable energy. Note that China's coal index has surged by roughly 10% in August, bringing this year's gains to nearly 50%. Beijing must weigh short-term economic stability against long-term goals of carbon emission reductions, with markets betting that a focus on the former will prevail. An emerging trend is seeing coal-fired plants extend their decommissioning in response to the energy crisis. Across Europe, political leaders have been trying to calm fears about the spiralling energy costs. Germany's economic minister said the country's gas storage facilities were close to hitting an 80% storage target ahead of winter. The minister said Germany was better prepared for its latest round of pipeline maintenance, with Russia halting the flow of gas through the Nord Stream pipeline to Europe for the next 3 days. The energy crisis raises fears of Europe's facing a second wave of inflation as spiralling energy prices drive up the cost of everything from wages to logistics. The head of the world's largest building materials company, which works on big construction projects across Europe and the US and is valued at around €30 billion, said it has been hit by a 50% increase in energy costs in the first half of the year. On the currency front, one Australian dollar has weakened compared to the US dollar, buying 68.45 US cents. On the commodity front, iron ore futures are pointing to a 1.5% gain. Gold lost 0.6%. Bullion has lost around 3% during the month of August for its fifth straight month of declines. Silver was down 2.2%. Copper fell 0.9%. Oil lost 2.3% to extend its 5.5% sell-off in the prior session. On the futures front, the SPI futures are pointing to a 1% fall today on the ASX. This is Tim McGowan. Have a great day.